Vincenzo's Gold Crypto Investing. Good early morning on this beautiful sunny Sunday on this mid-September, September 19th to be precise. Mostly sunny skies, crystal clear sunny skies with a chilly fall feeling. 56-degree morning, I believe. It's now 65 degrees. Dew point of 56 in a low temperature. I knew it was cold last night. 50 degrees last night, the overnight low. The coldest temperature overnight we've had in probably since early June. And it felt like fall in a 56-degree dew point currently with a northeast wind at 3 miles per hour. It feels very nice and comfortable in the greater Roseville metropolitan area in the great state of Michigan, right? On this early autumn day. It's a beautiful day. Let's go into the coins now. The old fucking coins. And we're going to start with Celo. Because it had a nice pump and we were warning about that the last few days here at Vincenzo's Gold Crypto Investing. We thought we were going to get the other day another down. And we did. It came right to here. So technically we got that, right? I thought it was going to come a little lower, but it's a pretty good call. Come down. And then yesterday or the day before, I said, it could come up to here now because it hasn't made an even bigger fall. At the $5 and change, we said, I don't know if I have it right up that line, $5.70. And it overshot that, but it was a pretty good call by Vincenzo. We were calling for from down here, a 12 to 13.69% pump, and it came all the way up on a wick to 19.69%. So a good call. If anyone heeded that and bought in and got some profits, congratulations. What I would do now is if you bought it down here when we were talking about it, way down in there, I would have this as my sell line, right? The $5.69 line. If it can't hold that when it comes in back test to shoot back up, if it does this and dips down, to get out. Because if it breaks that $5.69 line, it's going to give most of that back to the mean, and then you might come lower, down to our lower target that we have, much, much lower. But this, I thought, was just going to be a quick pump, and then it was going to trade back down. So if you're in this and you haven't taken your phenomenal 20% profits, if it gets back down here to that 13% profit line at $5.69 and breaks that, sell. Use that as your stop loss. Just set it as your stop loss so you don't have to worry about it and make the decision. And then wait. And then you're down here and you're like, fuck, should just have my stop loss back there where Vincenzo said. So that's what's going on in the Celo. This is a phenomenal call by old Vincenzo. I told you way up there, remember that big circle up there in the straight exclusive pointer tool? We told you in a super simple, easy way to trade this market to sell that up there. We told you that it was going to crash. There was no way around that this was going to crash, and the rest of the market. And the shillers and charlatans and the criminal gangster market manipulators sleaze heisted and shysted a lot of you by telling you that Celo was going to go straight to $50. Old Vincenzo gives you straight to the point, straight to the facts. Technical analysis, and you can see at current price now you're only down 44.69%, but at the bottom where some of you would have capitulated, almost 69% down in the Celo. We'll keep you updated on that, on the Celo. What's another one you people like? The TKY. My man that contributes to the channel by bringing in new and exciting coins. We'll look at the key coin that I don't have very high hopes for, but we were saying yesterday when I first brought the attention to the coin, a good spot to buy would be down in here or even on the retest down there, and then play the huge pump up to there to sell, because this coin's been drastically moving down, and you can see your overall, if we go to the weekly, you're in a falling channel. You can see right? That's why I always say go to the far out time frame and then work your way in so you can see where the coin started and came from. And you can see they came out with this coin at the end of the hype cycle in 17 when all the coins were crashing. So the coin started out way high and crashed. And then you hit your lower support one, and then you pumped, and you hit your upper resistance one. Then you crashed and had a whole slew for about a 3/4 of a year on lower support too in this descending channel, my correction. And then you pumped sideways off of that very long consolidation down, which you could have been in, put this in another falling wedge right there. And then the targeted move out of that would have been the top of the wedge. And you can see it started the wedge in October of 18 and it finally hit the target in May of 21, right? So you can see it's a long, in the monthly, that's a long pattern, but it telegraphed it. If you had the patience to just buy and accumulate all the way in here and seeing what that was, when it didn't break up or down out of the wedge, it just traded out of it. Eventually, it's going to come meet the target, right? Because if it was going to crash out of the wedge, it would have did it. This is usually how that would play, right, in turnkey. So if you had the patience to play that, you made phenomenal gains. But then you had to realize up here at some point it was going to give it all back, and it did. That's why you could play another pump up to here right now, which would be a very, very big gain. But I think a safer bet is it to come down here and you make it prove that it can back test this now and hold that as major support and not come down, fall through, and then come back into this triangle. Well, not that far, obviously, because the coin would be bankrupt. But you don't want it to come and do something like that when you're playing a pump and now you're down 50, 60, 80%. So if I was going to buy this, I'd wait for it to come lower and prove that as underneath ultimate support, or break above some of these moving averages and then play out another double top. But I wouldn't be in this coin. But you can see how starting from a far out time frame, the monthly, you can see everything we just diagnosed. We had a big falling channel, multi-year falling channel, and then we had a falling, then we had a wedge, a descending wedge, right? It's a wedge facing down, and you can see that in the monthly. That was almost a year consolidation, and that would have told you where the price was going to go down here after it came out of the descending wedge and just traded out sideways, right? If you had the patience and you understood how the market worked and you had money to sit there and you wanted to play a pattern, you could have played that and you would have made phenomenal gains in a super simple, easy way to trade this manipulated market. When you start from a far out time frame and then work your way in, right? Just like that. We were at the monthly, now the daily, we can see where the peak was. Get rid of that to get all this noise and malarkey out of there. And you can see you hit the upper resistance on your falling channel. Then if you move your way on into the 4-hour time frame, you get even more data and you can see where you're at now. And you're staying and trying to fight over these moving averages, right? So that's what I'd be looking for in the key. The XYO, just a quick one. You can see we were in that rising channel at the 0.059. We told you that's major upper resistance. You should be selling up there. 0.049, if you thought the coin was going to do anything, would be a buy. But if you were in the coin and it broke that, that was your sell zone. Because in this short amount of data in this new coin where we have that circle, if it broke that, your targeted move was down there at the blue line, which was about 0.033. And you can see it came down there beautifully, and that's where we're at now. If it breaks that line, you're going to come all the way down and retest your all-time lows in the coin. Or if you can bounce, you can come all the way back up into here. So a bounce, you go there. The breakdown, you come way down here and retest your all-time lows. And then you could have a huge kick up, right? That's what's going on in XYO. The gold and silver bullion market. I had a huge crash last week. And to me, it's just another, if you have money to chill, it's a good buying opportunity. But in gold now, what I would wait for, if you can't hold this, you're coming all the way back down to here. Just like in the Bitcoin, when you had that flash crash, gold had a flash crash here, which was about a 6-7% crash. And then it got bought back up really quick into this rising channel, right? And, oops. The rising channel, the technical target is just about where you're at now after you broke down. But I would say we're coming back down to $1,669 in gold, because if we zoom out, you can see we have in the weekly, it's almost like we have a falling broadening wedge, right? Which means it's a wedge pattern, but it's an inverted wedge. So you start out skinny and then you get wider at the base. And those are usually bullish reversal patterns when they finally break out. But as you get deeper and deeper into the wedge, the falling, descending, broadening wedge, it gets highly volatile, hyper volatile until a breakout, right? So I think you got to come down, and you could even get all this malarkey out of here. You could even come down, clone, our industry exclusive clone tool. You could even come way down here to the bottom of this wedge. I've been watching this as my ultimate low target in gold of right around $1,500, right? And that would be on our gold. I love gold, but I do have these boxes. That would be our get my shit together zone. In gold, your last line of defense before the shit house, right? See, I do have a shit house in gold, right? And I could see how we could trade our way down to here, right? Absolutely, I could see how we could get down to there. But the targeted move out of broadening wedge would be the top of the wedge, right? Which is way up there at the all-time highs, $2,100. But I could see gold. I've been in gold for a while. I just accumulate. So I could see it doing something and trading all the way down to here, and then have the ultimate liquidation and squeeze out and shake out in gold to get all the new buyers that came in after COVID on the pump and liquidate them all out, right? And then people like me just buy it from them. You know what I mean? Like all the mining shares that I own, I just buy it from them, right? Because I only buy the good companies that I know aren't going bankrupt and that can withstand this. But I could see gold trading all the way down here and have a liquidation event and a massive shakeout and shakedown of the weak hands and the market manipulators that suppress the gold and silver bullion market. Will buy it all back from them there and make a fortune. The long-term hodlers in gold and silver, which there's a lot of them, and they only buy in strategically placed spots. And I could absolutely see that what's going on here. So I would have a $1,486 ultimate bottom, but $1,675 I could see as being a short-term bottom, to where at the very least you come back down here and kick off, come back up to this broadening wedge and finally break out, and then trade out for this huge double top. At the very least, come back up and retest the all-time highs, because that usually happens. So that's what I'm looking for in gold. All my gold holdings have only increased. I haven't sold any because I don't sell them. I just buy more as the price goes down. So once the price starts going up, it's barely got to move up for me to get money back and be in the massive profits. I don't trade gold stocks. I hold and hodl like you guys are supposed to be doing in the crypto world. You guys are supposed to be crypto maximalist and crypto hodlers to the moon, but you all seem to just day-to-day trade it because you're always worried about the day-to-day fucking price. When I see the gold price decline, the price of gold go down 8-9% in a week, and gold stocks go down 10, 12, 15%. The ones that I own, solid companies, I buy more. I buy 50 to 100 more shares every time it makes another massive move down. So I bring my cost with it, add my shares, collect more dividends because I have more ownership of the company. And then when the price finally bottoms and the market finally settles, I'm going to make massive gains, because it doesn't matter to me if I've had some of these stocks for 2 years, 2.5, 2 years almost, maybe a little over 2 years now. And they've been up, they've been down, but I've been collecting dividends and I've been collecting more and more shares, right? Because I know where the price is eventually going in the years to come, and it's money that I don't need and can afford to sit there forever, really, you know what I mean? Until I get what I want out of it. But that's what I think is what's going on in gold. That's why you always go to the monthly. You can see last time when you had the financial collapse, gold pumped up massively and got all the way up to 1,900 and change. And from the start of the financial collapse in about 06-ish, when people really started to get worried, You see gold started trickling up prior to that, but '05 will start. Gold went up. Look at that, 300% in that collapse, in the financial collapse. And it got above to get my shit together box was created. And then gold went down, I believe, 52% from the top, 45% from the top, right? That's a massive collapse. And then it kicked up to its next leg and made all-time highs a decade later in this financial collapse. But we are in a rising channel in gold all time. So I could see this. You could even come way down to here. I just don't think that's going to happen in gold right now, but I could see that. But either way, long term, these are just great buying opportunities. Silver's the same thing. Great buying opportunities, right? Silver's one that's getting heavily manipulated right now to get you guys out of the market, but we still are in, yes, with our beautiful arrows, we are in this rising, ascending triangle. And I do believe silver will eventually break out of this, right? And you can see, get over here. You can see we hit it once. And we came down again. Then we came down again on a massive liquidation. And now what I think silver is going to do is start to get some ground in here and have a nice run back up into this triangle. That's what I think is going on in silver. I have lots of companies in silver too. And I buy more and more and more of them and keep collecting their higher and higher dividends. So some of these stocks started at a 3% dividend. Price of silver went down 15%, and now their dividends, because their stock price went down 6, 7, 8, 9%. Now I'm getting 4 or 5% in dividends. Some of the companies that I think are phenomenal are B2 Gold, Kinross Gold, Great Panther Mining. If you have a long term, it's a phenomenal buy now, because they had a big flood at the beginning of spring with a massive storm system that moved through a major mining, and it flooded it and then knocked down a big infrastructure wall, ruined some of their machinery, and flooded the landscape. And it took them 3 or 4 months of down productivity there where they couldn't mine, and they had to rebuild their ground, their infrastructure. And it took them, they were expecting a big hit, and they got a big hit, right? Their stock price got cut in half. So it's a great buying opportunity there. Royal Dutch Shell is a great company to invest in. Goldfields, beautiful company. Oswego Gold is a royalty company. Those are phenomenal. That company doesn't mine the gold. They just get a percentage of whatever a mine pulls out of the ground. They get their 2% or 3% on whatever that mine pulls out of the ground. Right? Good companies. That's what's going on in the gold and silver bullion market, right? And we'll finish out with the Bitcoin. You can see we're in this falling channel, and we put out this on Twitter. You can see if we zoom in. That's why we start from the far out time frame. So you can see where we're at, that blow off top with that rising wedge up there that Vincenzo called when I started making videos back in here. I was telling you we were in a topping reversal pattern with a pump and crash, and a pumping price and pumping volume was bullish. And then we got a up and sideways consolidation right there. You see that? Right? Remember back to our roots. You see that? This is going on a shirt. Up and sideways consolidation with crashing volume is bearish. Often you notice a rounding top, which is going on the front of the t-shirt as the buyers or the bulls become exhausted and the sellers or the bears take over the market. And this is going on the back of the shirt, and the price is going to come down, right? That's what you got going. That's what we had going on there, and that's what got Vincenzo on the radar in the crypto market, because everybody was telling you, they all said it was going way up there to 100,000. It was the massive hype train when all these coins, everyone thought XRP was going to take over their world's reserve currency. This coin was coming out. Broccoli coin was coming out. Digibyte was getting on the scene. Everybody was trying to find the next hype, and they thought it was going way up there to 100, 150,000. And old Vincenzo told you, as soon as you broke that bottom lower support and this rising wedge, the price was going to come initially way down to 41,000, and then your first short-term target was 33,000, and then you could have a pump, and then you were coming way down here to 22,000, right? And that's how we've been trading, and that's why you start from that far out time frame. When you join Vincenzo's Go Crypto Investing, you get trading alerts like this super simple, easy, and basic to understand where the market's going in the far out time frame. So that way you can zoom on in and get a better understanding of where the price may go, because you know how the price has acted in the past and got to where it's at now. And then you can possibly forecast where it's going to go, right? And you can see in a super simple, easy way, right? And you can see as you zoom into this pattern now, and now you know this is major upper critical support after it broke out of your long-term descending channel. And if you broke that where a big, beautiful blue arrow is, the price was going to crash. And you know the bottom of that is way down there at the bottom of the channel, the other yellow line, but that's way down at 20,000 and change. You know you're going to come down to your moving average. And I always say to go to the 3 hour or 4 hour time frame and find the 200-day moving average, and that's where the price is going to go after it gets rejected after a huge move up. If it gets rejected at major support, you're coming to the 200-day moving average. That's just how it works. It's a trading rule. It's a Vincenzo's Gold crypto investing rule, and it always works. And it's coming right down there again. And as you notice with these beautiful charts, if you check me out on Twitter, you could have been following this all weekend long and not had to wait for an update. And you would have known that that's critical support. And then if you broke that, you're coming down here with this big, beautiful orange, yellow arrow target on retest major support, which means when you're looking at a quick picture and my tweet, you know, if you break that, this is where you're going, right? And that's probably in an up and down fashion where you're going to end up in the next day or two, down to $44,569 in Bitcoin. Super simple and easy from Vincenzo's Gold Crypto Investing. Like, subscribe, and share. We'll end out with that. This was an extensive video. You can see in the Dogecoin, the fucking Dogecoin, you can see we're in a falling channel too with the big, beautiful blue arrow down there. We think we're coming to 22 cents in the next days, right? Like, subscribe. Peace and love. Peace and love.